Welcome to Real Estate Meets AI, the podcast where we explore how AI is reshaping real estate, construction, and the built environment one conversation at a time. I'm your host, Sandeep Ahuja, CEO and co-founder of Cove, a full-service architecture practice that runs on AI to drive smarter, faster, and more innovative outcomes. As an architect and building scientist, I've spent the past decade helping teams turn design challenges into data-driven wins. Now, I want to get into the nitty-gritty, the nuts and bolts of real estate, AI, and data that my industry peers and I have cultivated, applying behind-the-scenes knowledge to the trends we see in action today and deliver it directly to you. This podcast is about demystifying AI in real estate, pulling back the curtain to show you the real system, workflow, and decision-making that power our built environment. In each episode, I sit down with industry leaders, trailblazing developers, and tech innovators to unpack ideas, lessons, and real-world stories. You'll hear what's happening, what's working, what's evolving, and what it really takes to lead in an AI-driven world. This is the Real Estate Meets AI podcast. My guest today is KP Reddy. KP is the founder and CEO of Shadow Ventures, a seed-stage venture capital firm investing exclusively in tech startups transforming the built environment. A second-generation civil engineer from Georgia Tech, KP has founded and exited multiple technology companies and previously ran enterprise technology and transformation at Gary Technology. He's frequent lecturer, author, and definitely one of the most influential voices driving innovation in the AEC. KP, so great to have you.
Good to see you.
It's been a while.
Wow, yeah, it's been a while.
I've been following, all the newsletters and the things that you've been talking about in your podcast about AI in particular. So I'm curious, to kick us off, what's the one big thing that you're excited about right now? Some initiative, a shift in the market, or just a problem that you're fired up to solve?
I think there's been a massive shift, and I think you guys are probably an example of the shift. And that is, for so long, these tech startups have been trying to transform the existing construct of the AEC industry by selling tools for them to improve their process, transform their business. And there's been a high resistance to change there, which makes, 95% of tech startups in our space just not venture fundable. You just can't get big. And what you're seeing now is a shift, I would say, moving from transformation to disruption to say, look, I'm tired of trying to sell you my product. I'm just going to be in your business, right? Which we're very aggressively leaning into as a venture firm personally. That might be the right answer in order to acquire distribution. And we're very focused on the AI roll-up strategy.
I love that. That is definitely my worldview. And it's just great to see more and more folks leaning into it so heavily. I would be curious to kind of zoom out and take your point of view on the industry's temperature. We call it the AI meter, and it's a scale of 1 to 5, and 1 being AI averse and 5 being we are swimming. Where do you think the AEC industry is today and why?
Yeah, I think you're seeing some good power user adoption, right? There's maybe 5 to 10% of a firm that's playing with tools, experimenting, trying new things out. And then you see like at an enterprise level, the adoption being very, very light. Partly, I think the industry doesn't know what to do. It's like, oh, that's a cool trick. Can help me write my RFP, which is fine, right? My response to my RFP. But I think in terms of integrating into the actual workflow of how we get work done and being somewhat invaluable, if I take your web browser away today, how would you function as a business? Like you wouldn't, right? So I don't think if I take your OpenAI instance away from you that you're stuck, right? I don't think you're stuck. So I think we're not there yet.
Yeah. So on a scale of 1 to 5, where do you think that falls?
I would say we're between 2 and 3, depending on people's mood. I think there's a little bit of optimism. People get very involved with it. Then they get busy and they're like, okay, I didn't see any immediate productivity. So I think there's a vacillation between 2 and 3, probably.
Yeah, that's super interesting. Even within the 2 and 3, I'm curious if you think, because I certainly have a point of view on this, and I think it varies between the A, the E, and the C. And for our audience, which is a lot of real estate developers, the architects, the engineers, the contractors, do you think there's parts of the A, E, and the C that are more on the 3, pushing 3.5, and parts of that are more 0.5 to 2.5? You know what I mean?
Yeah, I think architects are like -1. They're just nowhere. They're just literally nowhere. And they're more like, oh, whatever Autodesk puts out for me, then I'll might use it if they're not going to charge me more for it. So
That's the caveat. If they're not going to charge me more
if they're not
for
gonna
it.
charge me more, if it's included, I'll try it out, right? And even then, I'm skeptical. I'm seeing a lot of adoption within engineering firms, structural engineering firms, MEP firms. I think they have like the engineering brain. They have that intellectual curiosity. They want to invest to understand how it works, and then they're applying it pretty well. In construction, I think the biggest adoption has been around some of the tools, around computer vision tools for job site type things. I think in the world of beyond that, I don't see a lot. And then, I started the thing called the Integrated Owners Forum last year because I don't know if you know, but I wrote a book called BIM for Owners and Developers, a textbook back in 2011.
Yes.
And none of it came true. It turns out BIM is a waste of time. Like from an owners and developers perspective, BIM has been an absolute waste of time and energy. It never delivered on any of the promises to the owners and developers, who, by the way, are our customers. They are the market, right?
They're the money.
They're the money. They're who we serve. So nothing's changed for them. In fact, many of them have said it's like gotten worse, right? It's gotten worse. And so I really studied that and said, okay, well, what's going to happen with AI? Let's not go down that same rabbit hole. And so I assembled 200 to 300 owners last year, and we meet quarterly in person, and we publish a lot of research for owners because I feel like with BIM, they didn't really have a seat at the table, which is kind of a common thing in our industry. The AEC industry treats owners very similarly to the way the doctors treat patients. I'm the expert. You don't know what you're doing. Just listen to me. This is what we're doing, right? And then WebMD shows up, and all of a sudden we're coming in and we're already pre-diagnosed ourselves before we come to the doctor and are asking better questions. I don't think we're quite there for the owners. And so I've been really spending a lot of time with them, building training curriculum, publishing a lot. We just published our third research report, but really trying to make sure that I help them wedge a seat at the table to have a voice. Because I don't think the BIM wave, they didn't really have a seat at the table.
Yeah, that's a really fascinating point. And I love the comparison you made with WebMD. And of course, given what we do as the world's first AI architecture firm, our point of view is very, very different. I mean, I think it's their table because we're building buildings for people to inhabit, but at the end of the day, every building is a financial investment. And if the money doesn't work and the folks that are, whether it's their LPs or their financiers, like not just them, it's who they're borrowing money from. If it doesn't work all the way there, what are we doing?
Right. 100%. I mean, I spent a lot of time with the capital allocators that fund these projects. Those are kind of my people that I spend time with. And when I talk to them about the flow of a dollar allocated to an asset, that only 70 cents actually makes it to the asset, and I show them how that works, they are blown away. And they're
Yeah.
like, how are we even getting IRR? How am I getting an ROI out of these deals when 30%'s out the door? And I'm like, imagine, like, imagine if we did better, right? Imagine if we did better. And I do think, with some of the tariff uncertainty, with general inflation, I think we've got to get better at this stuff. And then the second thing I think that's totally missed, that hasn't changed. So if I spend $250 million to build a building, nobody can tell me what my operating and management costs will be before I build it. That's like buying a car and not knowing how many miles per gallon it'll give you, not knowing what the maintenance schedule is, not knowing how much it's going to cost to maintain.
It's literally like playing dice with your NOI. It's like, well, it'll be in this range
Right.
ish.
And I think there's two reasons for that. I think the AE firms are just not equipped to have that conversation around operating costs, and they're too busy cranking out the drawings, so to speak. And then the other thing is owners inherently have a very bifurcated decisioning system. You have the capex people and the opex people. The capex on time, under budget, that's all I get judged on. And the opex folks have to take it over and say, oh, this is not what I needed to manage this. Now what do I do? Right. So I think there is an inherent bifurcation of responsibility and decisioning that the owner is responsible for. That's not entirely the industry. But you spend $200 million on a building, and Here's some keys, go figure it out.
That's when we're talking about some impact. I couldn't agree more. You talked about, kind of even the range of the 2.5 to 3 within the distinct A and the E and the C. And let's not forget developer. That's a critical part of the industry. I am so curious to see what you think are kind of the key areas. If you had to like tag 3 areas where AI is creating real impact right now,
Mhm.
what do you think those are? And I would imagine, given architects are not even on the spectrum, it's not drawings in your opinion, unless it
Yeah.
is, and I'm wrong.
Yeah. No, I think on the developer side, look, I mean, I think what an analyst can produce using AI for financial diligence, for analysis, what you can do with deep research to understand even the demographics of a location that you're building in. I think a developer these days, I work with a lot of large developers, the Jamestown properties of the world and people like that. And they have rooms and rooms, cube farms full of analysts, right? And I think that's where you're starting to see like, I don't need 50 people operating Excel spreadsheets. What I need is them to use AI and they can just produce that much more. And I think you're seeing that work, not just in real estate and development, but you're seeing that across the board. You're seeing that with management consulting. But I think between deep research and being able to understand, do the financial analysis pretty easily and quickly, I think you're seeing a lot of gains there.
That makes so much sense. I've definitely heard firsthand of other developers, including Jamestown, who was on our last podcast, about how they're doing that firsthand.
But I think one of the biggest things that we tend to miss, right, on this is everybody keeps talking about workflows. Oh, we need to improve our workflow, workflow improvement, workflow improvement. And I always say, which workflow, right? Because I think what we tend to miss, and people like to compare us to manufacturing, right? We're really more like the movie industry. We show up, we do a project, and we all disperse. And maybe we work again, maybe we don't. So really you're looking at workflows that are thousands of workflows that are highly decentralized. And that decentralization means people keep building software really where one person benefits and in many ways is not beneficial to anyone else. And in many cases, it might be even detrimental to them. So this idea of, oh, let's go buy Procore and run everything on Procore is this single source of truth. I say there is no single source of truth. We only have dispersed truthiness, right?
Yeah.
There is no single source of truth because the sub's not going to put everything into it. If you're an owner that's buying something like Procore, people might put things into it. But what they're really doing is archiving information into the system. There is no ground truth there. And so I think there's some really interesting things that I'm actually working on. I've spun up a little tech team, not that little. And so I've been like building a lot of these things for owners and developers, just saying like, hey, like I think everybody's got it wrong. Let me show you how I've got it right. And let me show you how I'm delivering off the chart type of results.
That's incredible. I can't wait to hear more about, kind of the things that the tech team is creating. Because my worldview is that, at least in the very straight up vertical of architecture, which is where I spend all of my time and energy, is that similar to what you just said, we most definitely have it wrong. And it's not about a band-aid. Or as one of the conversations I had recently is I can't keep adding new icing or new layers to the cake. I need to throw away the cake and bake a new
Mhm.
cake from scratch because the ingredients are entirely different, which sounds very close to what you're saying, even in your example about Procore. You're like, yeah, great, great, great. But the way the world works, it's gonna be not correct still.
Yeah. I think we've continued to build technology to tell people this is the way you need to do business. You need to align your processes with our technology. And that's not going to happen. As much as we love the owners, you and I both love the owners and developers, they're much like the doctor, right? I mean, it's like the doctor, they're the patient. I'm going to listen to you, but we're going to do whatever we want to. They really don't have that much authority to really drive change. They should, but they don't. And so I think when we started thinking about about AI, in my latest book, I talk about it. It's not about AI. It's about shifting and creating new business models. And one of the things that I think has happened last year to kick off this integrated owners forum, I wrote like a 5-page thesis, right? And what it was is the theory of change for construction and how we've moved away from the master builder. And that I think AI allows us to go back to being master builders. And what we saw happen is, it used to be architects, like the design team, They did all their structural in house. They did MEP. They did everything in house. And then we all got very specialized because we could serve geographically. I could be an outdoor lighting consultant and work on projects all over the world and make a good living. So globalization drove some of that. And then buildings honestly just got more complicated where you needed high degrees of specialization. So if we think about using AI to get back into, like I have architecture firms now that are hiring one structural engineer using structural engineering AI tools to have the horsepower of a 50-person department and are bringing
Hmm.
it in house, which is fantastic. Right. And so, because now we're not coordinating and doing all these meetings and all that. The other thing that I think is super important about all this, about kind of the recreation of the master builder leveraging AI, is you're going to have better coordination. But we have indoor lighting consultants, outdoor lighting consultants, architectural lighting consultants. I mean, we have so many consultants. But what that means is if you're a forward thinking AE firm, you have to take risk. And what's happened is through all this dispersion of the master builder, we've all decided we can't take risks as an industry.
Which how could the industry either, right? Like I argue that it's also, yes, because of all of the concepts, there's low appetite for risk. But I mean, a 17% gross margin, you really don't have too much money to take risk because risk a lot of times, costs costs some level of resources to be put on the line.
Well, I mean, I don't disagree with that, right? But I look at my world as an investor, the engineering firms at 17% margins, they're like investing in the S&P 500, right? If I don't beat the S&P 500 as an investor, then I should just go home, right? So my job is to take more risk, mitigate that risk, have an idea system and go beat it, right? I've got to go beat the market. That's my job.
Which, by the way, I'm not saying that that's okay.
Yeah, yeah.
I'm just like, well, they're probably not, or at least that's how they tell themselves.
Yeah.
Yeah, we're not taking risk because we can't. It's too risky.
Yeah. I think it's because they don't know how to.
That could
Right,
be true.
I mean, I've seen 'em contractors, right? Contractors complain that they don't make money. They're doing fine,
I
right?
think they're doing just fine
They're doing just fine,
compared to the A and E.
right? And they're the ones that'll go in and do real estate development deals, right? They'll take equity in the deal and stuff like that. So they do have a sense of risk and reward. And I think what it's going to take, and I think AI will enable this, is being able to take higher risks. I give these talks about how we think about the process of developing drawings. And, we do schematics and DDs and CDs and all that stuff, which is perfect when we're all drawing on paper. But there's no reason why a conceptual plan cannot create shop drawings automatically. And if the client changes their mind, which happens, that you make the change and it repropagates, right? So just condensing that whole process versus trying to apply this technology to existing process, you really have to change the process. The other area, I think, like we've invested heavily in robotics. And I think at some point, the drawings will actually be motion controlled of robots to go perform these activities, right? It's going to be less about plans and specs, plans and specs. That becomes a big so what.
Yeah.
And I think that's happening in the next 5 years.
Yeah. I can't wait. I don't disagree with you at all. I mean, even the humanoid, gosh, they're on my Instagram feed all the time where you see the robot like pick up
Yeah.
things. I'm like, yeah, wouldn't it be great if I could just have him cook food for me and load up the dishes and do the laundry? I think that day is coming. And I don't think it's very far.
It's not far at all. I mean, I had the benefit, right? I moved to Silicon Valley because I really thought as an investor and what's going on in the world that if I wasn't here, look, all the innovation is happening here. People can argue with me, but I see it firsthand. And what you see in the AI world is like 6 months old, right? I get to see things that are still in the lab. And then all the capital is here to fund these things. So I was like, if I'm going to continue to be, an investor that executes high returns, I've got to be here. And picked up the family and moved here.
That makes so much sense. Obviously, I think there's a lot of innovation happening in Atlanta, but I couldn't argue with the sheer count. There's more count in Silicon Valley, to be sure. Curious. So moving away from these more general examples, I'd actually love to talk about, whether it's one of the techs that you're developing, a portfolio
Mhm.
company, or a use case that you've seen firsthand where, a specific pain point was being fixed or made
Yeah.
better with AI. Like
Yeah.
if you could paint the old way and the new way, that would be super helpful.
Yeah. So we invest in a company called Lumina. Lumina does earth moving equipment. It's all EV based. They're moving towards autonomy, which is a lot easier to do with a brand new platform. So the old way would have been let's go sell grading contractors. Let's go compete with Caterpillar, John Deere, Kodo, all those guys, right? That would have been the old way of doing it. Because of our access to pools of capital, which we have, I would say we probably have more access to pools of capital than any other VC in this space by 1,000x, right? At a very high level. And so because we have a lot of these pools of capital, what we're actually doing is buying grading contractors. So we're not going out there saying, oh, let's compete with Caterpillar. What we're saying is, we're going to go buy the customer that we would normally sell to. So we're buying distribution and then we're going to keep buying grading contractors. So we'll run them as they run today with their old equipment, with their yellow iron, right? And then we'll put in our white iron, which is what Lumina's product is. And there's a lot of cool videos on Lumina. And so we'll start deploying our product in there to expand margins, to expand capacity, to do it better. One thing, EV bulldozers, pretty quiet. You
Yeah.
don't see the puffs of black smoke on the job site, right? And then with autonomy, the ability to just work longer hours and not impact the human condition of safety and things like that. So a safer job site, a cleaner job site, a more productive job site. So that's an example how I think things have shifted. Things have really shifted.
And I really like that story because it's not just the technology, but it's the business model too. Because I think that's critical in our old school space. I mean, you nailed it on the head like that. I couldn't agree more.
Yeah. So we've really partnered up with some of the larger VCs on these, like General Catalyst, on these AI roll up strategies specifically to our space. What I think you've seen happen in the industry is a lot of private equity, and private equity firms, unfortunately, do the opposite of innovation. They don't quite know how to deploy risk capital, they know how to deploy growth capital. Whereas us as VCs, we're fine with, oh, we spent $1 million on that, it didn't work out. Great. Let's keep going. PE folks don't operate that way. They don't think about things that way. So I think it's interesting times. And so I think, even what you've done with the firm, right? Really basically retrenching to be an architecture firm.
Yeah, that's it. We're not selling to architects and well because we don't want a piece of the cake. We want the whole cake.
Right.
And I like this new cake.
Yeah, it's value capture. It's all about value capture, right? And I get pitched. I listen to 25 pitches a week from different tech companies pitching me. And I think architecture specifically has become so spend anchored to the cost of Revit. So if I'm spending 7,000, I don't even know what Revit costs anymore, 7,000 a year on Revit, I'm not going to spend more than that on a product because everything else is like a feature to Revit. So I'm not going to spend 20,000 a year on it. Like, no, I already have Revit. So there's this weird like anchoring that's happened around IT spend that's anchored to the price of Revit, which is fascinating.
Yeah, that's definitely a can of worms I'd love to open at a time because it would take longer than the duration of this podcast. But all I can hear is a lot of thoughtful insight as it relates to the AEC. So, moving to a little bit lighter segment, we call it the lightning round. It's a little bit more personal. It's lightning for a reason. We don't think, we just go, go, go. And it's all short, one word, one sentence type answers. All right. Well, early bird or night owl?
Early bird.
Okay. You grew up in your dad's engineering's office. So was it coffee, tea, or were you just running straight up on teenage energy?
Just teenage energy. Teenage energy.
What's the one thing that Shadow Ventures won't ever invest in and why?
Gosh, we used to have we don't have that anymore.
Okay.
We don't have that anymore. We used to have a lot more constraints around what we would or wouldn't do. I mean, I just bought a bulldozer company. Like, you know what I mean? Like, what do you want?
Well, what's one for workflow that AI won't fix and that's okay?
Oh boy. I think some of the creative process, I don't think it'll fix. I think there's a superpower enhancement thing, but I think AI can only think about things that have happened, not things that might happen in the future that we haven't really envisioned.
Yeah. All right. Well, let's bring it home. Obviously, you've been investing in AEC tech for years and you've exited companies. So you've seen kind of what works and what dies. So, what's one piece of advice for leaders navigating this AI transformation, whether it's a 10-person firm or an ENR 500 giant?
Do not subordinate it, i.e., do it yourself. I'm hosting this Vibeathon next week, and I'm teaching CEOs of AEC firms how to vibe code. But as soon as they said, I'm going to send my IT guy or my innovation guy, I'm like, nope, that's not what this is. This is about you being hands on the computer, figuring it out yourself. If you are unwilling as the leader of the company to tinker, have intellectual curiosity, and do it yourself, then you need to fire yourself.
I love that. You could print that on a t-shirt and put it literally in not just AEC, literally every single firm.
Yeah. But that's what you're seeing, though. Executives that play with
100%.
AI are having better adoption because
I write code. My co-founder has written half the code. I mean, granted, we're not ENR 500, but we're also not 5 people. We're right in that sweet spot. And you got to do it yourself. You got to know enough so that you know where the boundaries lie.
and also how it aligns with your vision of the firm. Right. A great leader doesn't share their entire vision of the firm because 5 years from now might be scary to the rank and file. So as they're thinking about the vision 5 or 10 years from now, they got to know this stuff.
Well, I can't tell you just how much I've enjoyed this conversation. I can't believe that we've already been talking for 30 minutes, but this has been such a pleasure, KP. Thank you so much for taking the time to hop on with us today.
Absolutely. Absolutely. It's good seeing you.
Thanks for listening to the Real Estate Meets AI podcast. If you enjoyed this episode, subscribe to the Real Estate Meets AI podcast on your favorite streaming platform and follow us on social media at code.inc. Until next time, I'm Sandeep Ahuja.